Alright guys, what's up? Today we're going to be going over why I use daily bias instead of drawn liquidity. So basically, drawn liquidity is an ICT concept, you could say, or some sort of ideology. So it's basically where there's a draw where price will lead to as a liquidity point to basically carry on moving the markets. Now, if you're a breaking retest trader, you shouldn't really worry about this. You shouldn't learn about it. It's good, it works, but it's definitely not needed for our type of strategy. So let me just quickly explain what it is. It's basically the market is drawn from two either ways, from fair value gaps or from stop losses. So once a high gets swept out like this, the next draw on liquidity would be the next low or the next fair value gap. So in this case it was this low right here. Anyway, let me just get on to why I use the daily bias instead of this. So for our type of strategy, it's more longer term. So we can't be taking the retracements, as in, look at this is a downtrend, right? In this case, we just want to be taking sells. So for the days that people take buys, we stay out. So ICT traders, because they're scalpers, because they trade like an hour max, I'd say, then they can trade the days that it goes up too. They can trade the retracement days. So you see this up right here, you see this up right here, you see this up right here. These are the days that us break and retest traders, we wouldn't be trading. So you want to stay in a consistent basically bias. So you just want to be selling in this trend, right? In this trend you just want to be buying, you don't want to be selling. So the days here where it goes down, where it goes down, where it goes down, you don't want to be trading that as a break and retest traders. But an ICT guy, they might trade that because they're more shorter time frame. So essentially, with the drawn liquidity, let me just show you an example. So you can see here that overall we're going in a downtrend, right? Overall we're going in a downtrend. At this point, we don't really want to be buying, do we? But you see ICT traders, because they're scalpers, they can afford to buy. So let's say there was a nice SMT right here. This is quite an advanced concept. An SMT right here, where is it? There it is. So let's say there's an SMT right here, it bounced off of some sort of fair value gap right here. Let's just mark it out. Okay, and then their next draw is this high up here. Okay, this is their next drawn liquidity where their TP will be. They also have multiple drawn liquidities, so the next one, another one could be this order block, probably with a fair value gap as well. So these are the two draws. Now, as you can see, this is very accurate, and by the way, this is no hindsight stuff. I've called out drawn liquidities multiple times on my YouTube already. But anyways, the reason why we don't want to be using that is because it's way too short time frame. This is happening in less than a day, probably happening in what, a few hours, you know. So as a break and retest trader, we want to trade the overall trend. Okay, so instead of trading the buys that come up here, what we need to do is we need to follow the trend, follow the daily bias, follow the last three candles, and just wait until we can get sells. Because once we get sells, let's just say we slap it on there, then we can ride it all the way and it will actually be probable. It wouldn't just come back and reverse on us. So hopefully that just makes it a bit more clear. Now I'm going to quickly go over how I find my daily bias consistently. So it's quite simple, and I learned it from Daniel Effects. But essentially you just want to follow what the last three candles are doing in the daily time frame. So as you can see here, we're on this current candle. So I probably wouldn't be trading today, but if I do, it's going to have to be longs. So I'm only looking for longs still, unless tomorrow, if this closes bearish, then I'm going to be looking for sales the rest of the week. But as of now, it's just going to be waiting and seeing, but I would like to see buys. US 30 is still going to be buys, but let's say if it breaks bearish, and it closes below this, then I'm probably looking for sales for the rest of the week. Gem 30, literally the same thing. But yeah, I hope you can see why drawn liquidity would not be good for this type of strategy. It's just because it's way too short term. It's just way too short term when you find the drawn liquidity. Like, by the time that it hits it, right, your trade's going to be gone already. So what we need to do is find the longer term bias, where price is heading. Because as I said, with ICT, they're all scalpers, so they're going to be in and out of the market very quickly. With us, we're in it for the longer term. We're in it for like a couple hours, right? So we want to have like an overall trend. But yeah, that was just a quick video, and yeah, hopefully it's helpful.